Let's talk about how the rich people avoid paying capital gains taxes. Now, it's no secret that rich people, on average, pay less in taxes than the average American. Now, how can you, the business owner, the profitable business owner that now has all of these profits in the business, how can you use the exact same strategies? How can you copy the rich so that you can pay less in taxes than your neighbor? In this video, we're also going to talk about how is it and why is it that the banks are willing to give so much money to wealthy individuals so they can reproduce more income, reproduce more wealth, and at the same time, not paying as much taxes as the average person. Let's learn how to copy the rich. Ready? Let's get started. Hey, thanks so much for watching this video on my YouTube channel. My name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a tax strategy video here on YouTube. For you, the profitable business owner, my goal is to completely simplify this tax strategy so that you can understand it. At the same time, you're able to go ahead and implement this tax strategy, or at least take it to your accountant so he can implement it for you. But if you don't have a tax advisor, you gotta get yourself a tax advisor so these tax strategies could be implemented for you in your business. Thank you so much. Don't forget to subscribe if you love the video. Let's go ahead and start saving you money on taxes. Okay, awesome. Let's get started with this video. Now, before we continue, I do want to introduce you to my video editor. His name is Mr. B. He's been doing a phenomenal job editing my videos so that you, the business owner, can easily follow the videos. Now, let's say hello to Mr. B. Let's say hello to him in the chat and say, hey, Mr. B, you're doing great work here. Now, Mr. B, can you also say hello to the people?
Hi guys, enjoy the video.
All right, awesome. Now, let's get started. Before we understand how the rich people really avoid paying taxes on capital gains, we have to understand that rich people, they've got money. And when they have money, what do you think they do with that money? First of all, they use tax strategies and they have a tax advisor. So if you don't have a tax advisor, you've got to get yourself a tax advisor. Now, what they do with their money is that they start investing in assets, whatever that may be. That could be real estate, that could be art collection, that could be coin collection, that could be other businesses, that could be stocks and commodities, whatever that may be. When rich people become wealthy because of the assets that they invest in, they become attractive to the banks. Let me show you this example, this recent article that I read in Bloomberg. Check it out. Mr. B, can we pull it up on the screen? Now, in this article, it says that a wealthy individual, a client of a Bank of America, put up his art collection. Okay, think about this. Put up his art collection as a collateral to be able to take out a loan to buy a sports franchise. Now, what does that even mean? You see, this wealthy individual, who is also an art collector, happens to be very smart, just like other wealthy people that know what to do with their money and use tax strategies. He thought to himself, hey, right now, I'm not sure if I want to sell my art collection. And if I do sell my art collection, now I'm just right now speculating what he thought, what was going through his thought process, right? Now, if I do sell my art collection, I am going to end up paying capital gains taxes on that art collection. So let's assume that art collection was $10 million. I'm just making this number up. If he would have sold it for $10 million, he would have paid 23.8% of capital gains tax. Now you might say, Boris, wait a second. I thought that the federal maximum limit of capital gains is 20%. That is true, but we also have what's called a net investment income tax. It's a hidden tax that goes on top of your regular capital gains tax on the sale of the assets if your income exceeds a certain threshold. So in this case, it would be 23.8% of federal income tax. Now, if you're in the states such as New York or California, you can imagine what the state income tax rate would be. It would kill this art collector with the taxes. What this person decided to do, like, hey, went to the bank and said, hey, I've got this art collection, but I want to buy a franchise. How about I put it up as a collateral? Okay, I put it up as a collateral. This way you give me the money. Now, remember, loans are not taxable. Now, this collector have decided to use the loan against the collateral. Now, this collector also kept the possession of his art collection. But the most importantly, he received a lot of money from the bank because he is attractive to the bank because of the assets that he owns. Now, he used that money to buy a sports franchise. Now, we're not even going to talk about the deductions that he's probably got from that purchase if it was an asset purchase. And I've got a videos about asset purchase versus a stock purchase of the business somewhere around this video or on my YouTube channel. You can check that out. But think about it. This is what wealthy individuals do. They accumulate assets and banks are giving them money for those assets. Now, in the next segment of the video, we're going to talk about how you, the profitable business owner, can copy the strategy like this one. Now, you don't need to be an art collector, so to speak, to do this, but how can you copy this strategy in your everyday life, in your business, and with the assets that you own right after this break? Hey, thank you so much for watching my videos so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-offs that every S-corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. Okay, welcome back to the video. Now, we talked about how is it that the rich people avoid paying capital gains taxes. Now let's talk about how you, the business owner, so to speak, can copy the exact same strategies in your business. Before we continue, I want to bring this clip to your attention from Robert Kiyosaki. Mr. B, can we play this clip right here?
I am a billionaire in debt. You know why? Because I get tax breaks for borrowing money.
Then do what with it?
I have to invest it to make more money. Let's say I own a commercial building and buy it for $1 million. It goes up to $10 million. Most guys would sell it. A basis of 1 million to a basis of 10. I have a $9 million capital gains. So instead of selling it, flipping it like those flippers do, I don't flip, I don't sell. See, the moment you sell, as you know as an attorney, you've now executed a capital event, a taxable event. So what I do is, let's say I buy a property for $1 million, it goes to $10 million. I'll borrow out 5 tax-free. That's why there's no financial education in schools, because if you knew how to handle debt, you wouldn't save that crappy dollar you have in your hand. I'd rather borrow the money tax-free.
All right, we got the point, right? So Robert Kiyosaki, for those of you that don't know, he's the author of Rich Dad, Poor Dad, one of the greatest books written. If you haven't read that book, I personally recommend. But his main strategy is like, hey, I basically buy real estate and my real estate appreciates appreciates in value. And instead of selling it, I go to the bank and say, hey, I've got this real estate. My loan on this is this much, but it's actually worth a lot more. I'd like to take out a loan against it. The banks will happily say yes. Instead of selling the asset, what basically he's doing is taking the debt under this asset to invest more. Now, let's take a step back for a second. Understand that debt management is a serious skill to have. Wealthy individuals, rich people, they know how to manage debt, right? They surround themselves with professionals that help them to do that. That's why I always say, hey, if you're working, for example, with a tax preparer, a regular accountant, you're overpaying in taxes because you're not using tax strategies. You're not working with a tax advisor and you're not surrounding yourself with professionals to help you pay less in taxes. So wealthy individuals surround themselves with professionals and they learn how to manage debt. They have financial education. Now, if you can't manage debt, then obviously don't do this strategy. But as you become rich and you start generating profits, good profits from your business, and start investing it into real estate, then you learn, so to speak, or really start investing in any other assets. You know, you're buying businesses, commodities, securities, or like I said, real estate. What happens is that you're learning, hopefully, how to manage some of the debt. And that is the skill that you need to acquire. Because what happens is that when you buy real estate is one of the investments, right? You're not going to go ahead and buy art collection unless you're into art, but you're going to buy real estate. Real estate is going to give you depreciation. That depreciation is a deduction against your rental income. For example, if you start investing in apartment complexes or commercial property, that depreciation will produce a loss. That loss will be deducted against your highest taxable event, which is your earned income, okay? That will produce deductions. At the same time, the real estate, it grows in value. And banks will be willing to give you more money against your real estate so you can do with it whatever it is that you want. Hey, thank you so much for watching my YouTube video. Just a quick commercial break. If you like what you see, please like the video. As a matter of fact, share it on your YouTube so that you can help other business owners to save money on taxes. I would also appreciate it very much if you subscribe to my video. If you like, share, or subscribe, it really helps me with YouTube algorithm, where YouTube will really push this video to other business owners and they can learn how to save money on taxes using simple tax strategies that I teach with my whiteboard strategy. Thank you so much, and let's get back to the video. Now, you have to understand, as a business owner, what you control is your income, right? As a business owner, you control income, how much money you make. You know how much money you make. You know how to execute it. The next step, right, after the step of becoming rich, and becoming rich means knowing how to produce income and having cash. The next step is to invest that into the real estate. Make yourself so attractive to the banks that they're willing to give you more and more of that money so that you can invest. You don't have to sell the real estate that you own. All you have to do is borrow against it to invest more. Obviously, again, you have to tread the waters carefully, so to speak, and you need to know what you're doing. Robert Kiyosaki gave an example. Hey, if I buy commercial property for $1 million, I sell it for 10, I'm going to have a taxable capital event of $9 million. I don't want to do that. And I don't want to flip it. What I'm going to do is I'm going to go to the bank and I'm going to say, hey, it increased $9 million in value. How about you give me $5 million? They're going to give you $5 million. That $5 million can now be used, or he probably uses it, to invest in other real estate while not paying any income taxes on the $5 million. Now, this is not a new concept that Robert Kiyosaki, for example, invented it. A lot of rich people, a lot of wealthy people with smart professionals around them use these exact strategies to avoid paying taxes on the capital gains. They actually intentionally avoid it. Like, why would I sell this asset when I still keep it, can still take out money against it, and instead invest? I hope this video was helpful for you. Thank you so much for watching it. And if you liked the video, please go ahead and subscribe it, share it with other business owners, like it, comment below so that it really helps YouTube push this content, recognize this content, and it will help the algorithm push it out to more business owners. Thank you. Until the next time.